Small cap mutual funds have always been favorite category for investment and are generally a part of anyone's portfolio. And why should not be? These are the funds which generate the extra alpha, which improves the overall portfolio returns. So in today's video, we'll do a detailed analysis of one of the most popular small cap funds, that is Canara Robeco Smallcap Fund. Earlier also, in April 2022, I have made a video on this. Link is attached in the I button and in the description. The markets have fallen recently and may fall further also from here, or may recover and make a new all-time high. Nobody knows, and even the most learned, seasoned, and experienced person in the market can also not predict about it. So, not going into it and wasting your time, let's check the fund's performance using real data and decide whether to continue our investment in this fund or should exit this fund now. And if we decide to exit, then which fund to go with. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Canara Robeco Smallcap Fund has been one of the star performers in its category, that is small cap category. Here, we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 4,400 crores, which is okay for a small cap fund. While the expense ratio is 0.39%, which is quite less as compared to other schemes in this category. The benchmark index, that is the reference against which the scheme is compared, is Nifty Small Cap 250 TRI. Now let's look at the sector-wise allocation and compare it to its benchmark index. From the table, it is very clear that the fund is heavily invested in services and finance, followed by capital goods, material, chemicals, and healthcare. Services and chemicals being evergreen sector and finance being a core sector, quite a good performing small size companies form a part of this sector. And when compared to its benchmark, its allocation is quite different than from its category. Here, there is no exposure to a specific sector, which provides a good diversification to the overall portfolio. Now let's check the top holdings and portfolio allocation. As evident, Indian Hotels and Great Eastern Shipping are the main stocks of the service sector, whereas City Union Bank, Canfin Homes, Credit Access Grameen, and Indian Bank are from the financial sector. KEI and Schaeffler India are the main stocks of capital goods sector. Cera Sanitary Ware and VIP are the main stocks of the material sector. Here also, the stock selection looks good. On checking the portfolio allocation, it is evident that the small cap shares form around 65% of the portfolio, whereas mid cap shares form other 22% and rest 8% is allocated to large cap stocks. With the above allocation, the fund is able to generate a good return in long run with medium to high risk. The portfolio allocation is quite good and very suitable for a long-term investor. Now let's look at the fund managers. Mr. Sri Datta Bhandalwardar has been managing the fund since October 2019, that is almost from the start of the scheme. He has been joined by Mr. Ajay Khandelwal in December 2021. Both together has been managing the scheme quite efficiently and hope that they continue in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the fund performs on risk parameters. Here, we compare the parameters with the benchmark index and category average. First, mean return, that is the average return in a year, which is 38.12, which is more than both the category average and the benchmark. Here, higher the value is better. Second, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 25.31, which is less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.36, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to the benchmark, which is 0.82, which is less than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here it is 13.73, which is more than the category average. Here, higher the value is better. Hence, after looking at all the risk parameters, we concluded that the fund's performance is quite good as compared to the benchmark and the category. Now let's compare the trailing returns. On comparing the trailing returns for 3 years, 1 year and less, it is seen that the fund is able to beat its benchmark and category average and also with a good margin. The data of 5 years and more is not available as the fund was launched in February 2019 only. Now let's also check the calendar returns and see how consistent the fund is in its performance. On checking the calendar returns for 2020 and 2021, it is very evident that the fund has outperformed its category and benchmark for both the years. Now let's also check the performance for the first 3 quarters of 2022. Here also, if you see, the fund has outperformed in 2 of the 3 quarters of 2022. Hence, from the calendar returns, it can be concluded that the fund is quite consistent in its performance. Now let's also see the rolling returns. On checking the rolling returns for 3 years, 1 year and 6 months, it can be observed that the performance of the fund is better than the benchmark and has been able to beat the benchmark 100% for 3 years period, and for 1 year and 6 months it is 88% and 78% respectively during the returns period, indicates that the fund's performance is quite good across all the period. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 100, which indicates that the fund outperformed 0% more than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index had dropped. Here, the value is 68, which indicates that the fund declined 68% as compared to the index during the fall period. Here, lower the value is better. Now let's see the risk return graph. Here, on x-axis, we have standard deviation, whereas on y-axis, we have total returns. It is very evident from the graph that the fund has higher total returns value as compared to both the index and the category, whereas the standard deviation is higher than the index but lower than the category, which is quite good for a fund. So now coming to the conclusion, what investors should do. Before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel if you are not subscribed till now to watch such interesting videos in future also. So now let's look what investors should do. First, the existing investors. The fund has been performing quite good since its inception, and so I feel existing investors should not worry and continue their investment in this fund, but keep an eye on the fund's performance as the fund is quite young and does not have much past records. Second, the new investors. One can start a new investment in this fund as its performance is quite good. But if one is ready to take more risk, then can go with Quant Small Cap Fund also. I would like to add that I do not have Canara Robeco Smallcap Fund in my portfolio, and I am not planning to start a new investment in near future as I have recently started my investment in Quant Small Cap Fund. Do check my older videos. Click the attached cards to watch the video. Thank you.